Hello and welcome to another update video about MATIC. MATIC continues to move in this sideways range, and we could be dealing with an Elliott wave triangle here. The potential is there. It just would need to confirm the breakdown with a break below first 66.6 cents and then 64.5 cents. Okay, so I'm going to zoom in a minute. We have here a setup basically for lower prices in wave 5 of C of Y of 2. It's just important that we don't come to conclusions too early, because these triangles don't tend to break out in the direction you would think they do. They have been extremely unreliable in this cycle, so I don't trust this triangle. It also doesn't really look great, this triangle that we see here in this sideways range. So a move to the upside is absolutely possible as well. It's just important to be aware of the relevant levels that matter. Looking at the bigger picture here, the 4-hour chart, we can still see a move up into the December highs in 5 waves. And then here this kind of WXY structure to the downside, in which, yeah, you could say, we're sort of in the late stages of that correction. It's a wave 2 correction, and it should form a low somewhere in that yellow support box. The formal invalidation point of that so-called 1-2 setup is at 49 cents. Well, let's call it 49.5 cents. Any break below it would emphasize a more bearish outcome here. At the moment, anywhere in here, the price could form a low and reverse. If it's forming another low or not, I would call that even noise. It is definitely likely to get another low. It would be good for the chart to avoid it, I have to say. But the chart hasn't given me anything to indicate really that the low is already in. A third wave to the upside, so if we really work on the third wave rally already, then it should take us to $1.76 or higher, possibly higher, right? And then we should get a wave 4 and a wave 5 into the $2 region based on just this here. It really depends on where the actual low is formed. So it can always go a bit higher than that. And then ultimately the further upside targets really depend on how aggressive this third wave is extending. But $1.76 is the first ideal target for this third wave. And the price would ideally break above it, to give us a viable and strong third wave. Let's go to the smaller time frame, because today we had a bit of upside momentum, but it all looks so choppy. It's just, it didn't really get the upside momentum needed to form a new high. So you can see the triangle shape here on the chart. Lower highs and higher lows, yeah? And this is what the yellow wave count represents. We could say that this is possibly a wave 4 triangle, which consisted of an A wave, a B wave, a C wave, a D wave, and then the price turned around in my micro support area. Yeah, and this was the low point where the price retraced to the 61.8 retracement on Sunday, and it showed a reaction. I think we talked about that already in the videos over the last few days, that we saw this upside momentum, but to really get an invalidation of the yellow count, to achieve invalidation of the yellow count that would lead to one more low, the price would need to break above 76 cents, and then in the next step 77.7 cents, which is the swing high from the 6th of May. In the further process then, the third wave should take the price to round about 88 cents or higher. And then we need to get another 4 or 5, 93 cents, 97 cents. What is really important is that the third wave really reaches 88 cents, or it's not a viable third wave. So again, the white count suggests that we, or the white count, let's say, shows us what would need to happen for us to continue to entertain the idea that the wave 2 might have bottomed already here on the 13th of April at 59 cents. It takes that third wave, and to have a viable third wave, it needs to reach 88 cents. The fourth wave typically would retrace into the region between the 78.6 extension and 100% extension, and the fifth wave then to around about 93. Yeah, or higher, it's always possible. So the triangle is technically valid as long as the E wave stays below the top of the C wave, and E wave might never or should never go above the high of the C wave. Not valid. So therefore this would be invalidation, and it would rule out one bearish pattern. Therefore the bulls need to bring the price above that level, but yeah, it doesn't convince me, what's going on here. Strong red candle. And if we take out previous swing lows here, 71.4, 70 cents, then, I don't know, I can't confirm a top in place, obviously, but, there's a clear invalidation point. That's what I'm saying. So you have very clear parameters here. And we're still in the range, but holding support, but also we don't break out to the upside. So we continue to move in one of the tightest ranges that we've seen in a long time. It takes patience. The levels to the downside are clear. The levels to the upside are clear. We just have to wait for the market to finally generate a breakout. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.